So you need to start to consider about your initial investments. It's not important, it's critical that you have decent profit margins. Cash flow is king. If you run out of cash, it doesn't matter how good your business is, you're going under.
Profit Pilot.
Welcome back. So as part of the series on how to set up and grow an e-commerce business, in the last video I spoke very briefly about business planning and about how we don't need to go too overboard on that. We basically just need the mission or the soul of what your business is, your vision, where you want to be in 12 months, 3 years, 5 years time, whatever, and then your breakdown about how you're going to get there. So your goals, your measurable goals. One of the important things to consider is the financial planning and forecasting. So on another video, I'll go into a bit more detail about COGS. I've already mentioned how important, it's not important, it's critical that you have decent profit margins, because the cost of acquisition for e-commerce is ridiculous. It really is. And that's what kills most people. They don't even think about it. And there's a lot of people, these lads on Instagram going, we'll 10 times your business. We just pressed 2 buttons and it changed overnight. No, come on, behave. So financial planning and forecasting. So you need to start to consider about your initial investments. So how much capital do you need to get the ball rolling? That's cost of the website development, which I'll go through some options in a little while. Buying your inventory, marketing, which is a bit of an unknown to start with. But if you use an MVP plan, which I mentioned earlier, I'm working with a client at the minute. We're looking to launch in a different country, looking to break America. So I'm doing an initial MVP where I'll target a certain area, a certain state. So I'll just get an idea of cost per acquisition, click-through rate. I'll get an idea about how much it's costing to acquire a customer. And then because each territory will have different objections and concerns. So again, this is moving into conversion optimization, which I'll go down on another rate. So yes. So initial investment, how much capital do you need to start up? And how many products or items or whatever it is you're selling do you need to sell a month roughly just to break even? Now, these calculations, don't spend too long on them because they will be wrong. But again, just like your mission, your vision and your objectives, it gives you a rough idea. And then you can start to work out cash flow projections. So how much money is coming in and out of the business. So you got to remember, cash flow is king. If you run out of cash, it doesn't matter how good your business is, you're going under. It's a cardiac arrest for a business. If you run out of cash, you need to at least have an idea what your cash flow is going to be. And then you can look at revenue projections. So this is when you're starting to, all the boring stuff like you have to employ staff and manage staff and all that kind of headache stuff, which I don't like. But anyway, so we'll dive into a bit more detail on that at another point. But yeah, initial investments, including marketing. This is where an MVP really comes into play, because you get a rough idea before you start putting all this together. If you just do a little test page and you'll throw money at this thing, and it's just a data gathering operation, and it's a data gathering operation which gives you the more realistic figures to pop into this. And the more planning you can do in your head and on paper before you launch a website, the better. But that's not saying you get analysis paralysis. Like, one of the most important things is just getting started, but you need to get started in an intelligent way, at least with some kind of thought process. Because then you're not so reactive when unexpected things crop up, and you're more strategic. But yeah, do at least a little bit of planning and just rough financials. Like, share, and I can't remember what the other thing is.